Real estate markets across Australia remain busy with solid price outcomes, with a couple of notable exceptions. While media headlines have suggested that market decline and falling prices are widespread, our research shows this is not the case. Our latest quarterly analysis of sales activity shows that most capital cities and most major regional markets continue to deliver busy markets with little evidence of price decline. Our examination of all the price data that's available from multiple research sources indicates that there are actually very few markets where prices are falling. Indeed, most market jurisdictions still have rising prices, though not at the same rates of growth as in 2021. Now, the most important and relevant factor for property investors relates to vacancy rates and rental growth, and these are the strongest that we have ever observed. The national average vacancy rate, according to both Domain and SQM research, is around 1%, but most postcodes across Australia have vacancies well below that number, which depicts a rental shortage crisis. It's never been harder for prospective tenants to find a rental property, and the serious shortage means that rents are rising. The capital cities, house rents are up 15%, unit rents 17%. And this makes ugly reading for people who rent, but it presents an attractive proposition for investors because increased rental yields can compensate for rising interest rates. Now, vacancy rates are likely to continue falling for a host of reasons, including the fact that international borders are open, bringing the return of migrants and overseas students. The federal government's planning to actually lift migration numbers to deal with worker shortages. And we have no policies that have been announced by federal or state politicians to deal with the shortage, while at the same time major developments are being cancelled or deferred by developers because of rising construction costs and a shortage of pretty much everything. So everything points to a market where investors are in a position of strength. And in addition, there continues to be price growth in most locations throughout the nation. An analysis by experienced real estate economist Nerida Knisby, published in August, found that only 1.5% of suburbs had actually experienced annual price decline, which aligns with our own analysis of available price data. Now, the latest price report from SQM Research indicates that house prices remain considerably higher than a year ago nationally and also in all 8 capital cities. And in the past month, house prices have risen nationally, though only marginally, and in all 8 capital cities they've had monthly growth in either house prices or apartment prices, or both, in the case of Adelaide, Perth and Darwin. So against that background, we have considered a number of key market factors in considering choices for our new edition of the National Top 10 Best Buys report. Those factors include the fact that the strongest markets in all cities are the ones that offer affordability, including outer ring housing precincts, the fact that the exodus to affordable lifestyle trend continues to be a powerful force, infrastructure spending remains a major influence on residential property markets, and locations that offer above average rental yields are increasingly sought after. Accordingly, the new edition of Best Buys places emphasis on locations that offer a degree of affordability, lifestyle factors, low vacancies, and potential for good rental returns. It also features locations where infrastructure spending is likely to energise local economies and create jobs. So the top 10 provides a balance between affordable locations in capital cities with growth potential and also regional markets which are poised to outperform. And the message overall is that investors looking to buy well in locations where rents and yields are rising with the potential for future capital growth have plenty of excellent options around Australia.